Hello and welcome. I'm Sarah Walker and you're watching IGTV and the IG Forex chat, where we put your questions to the experts. Coming up over the next half hour. As China begins to blink, we ask, is the US-China trade war about to become a currency war? Powell says we're a long way from neutral on interest rates, giving a boost to yen and Swiss franc. But what impact is global policy having on FX? And where next for sterling after Theresa May sticks to her guns on Brexit strategy? And joining us in the studio tonight to answer your questions are Sam Morton, a Forex trader specialising in day and swing trading. He runs lovethepips.com. Also with us, Raj Dhall, a market analyst at TradingView and FX Daily. Welcome to the both of you. Now, as I said, our experts are here to help you understand and trade these markets and to answer your questions. We are currently streaming across IG.com, the IG trading platform, YouTube, Twitter and Facebook. So do join the debate. As China begins to send your questions directly to our experts using the hashtag IG Forex chat on Twitter, Facebook, the IG community, or you can even put them in the comments on YouTube. But let's start with the trade war. So while you send in your questions, Jeremy Naylor gets us up to date on what's happened so far.
What connects milk, cars and Christmas shopping? Well, for American consumers, these are just a few daily necessities that are affected by the trade wars. In 2016, Donald Trump got elected as an American president with the promise to put America first and bring jobs back to US workers. In May of 2018, the US added a 25% tax on steel and 10% tax on aluminium reported from the EU, Mexico and Canada. The EU retaliated with tariffs on 2.8 billion euros worth of US goods on products. That led to a meeting between Trump and the European Commission chief, Jean-Claude Juncker. They agreed to aim at zero tariffs on industrial goods, excluding cars, while the EU laid plans to buy more soybeans. In October, Trump tweeted about the new United States-Mexico-Canada agreement. US farmers will gain access to 3.5% of Canada's dairy market, worth $16 billion a year, and includes measures aimed at shifting lower-paid car manufacturing jobs from Mexico. However, the biggest deal is still in play. During his 2016 campaign, Trump said China had engaged in the rape of the American economy. And since January 2018, he's been imposing tariffs on Chinese goods totaling $250 billion worth of goods, launching what China says is the largest trade war in economic history. And there are signs the trade dispute is already having an impact. Major automakers, including Ford, General Motors and Fiat Chrysler, have issued a warning that the changes are hurting performance, citing higher steel and aluminium prices due to the new taxes. Walmart sent a letter to the Trump administration warning that tariffs will likely result in it having to raise prices for the consumer. And the International Monetary Fund said that an escalation of the tit-for-tat tariffs could shave 0.5 percentage point off global growth by 2020. There are also concerns that the trade war could become a currency war, with Trump once again accusing China of manipulating its currency.
OK, well, let's get more on the trade wars and indeed what it means for the currency markets. Raj, let's go to you first. There is the concern that, there's only a certain amount of imports and products that can have tariffs put on them, and actually that China now uses its currency.
Yeah, I mean, the biggest thing we've seen so far is obviously the dollar versus Chinese yuan. We've seen the rise, everybody's seen it. So no matter how much Trump decides to slap on tariffs, it does seem to be retracted in the movement of that currency, pair rather. So I think we're just seeing a tit-for-tat kind of war with trade versus what's going on in the currency markets at the moment.
Yeah, I think so. What's very positive the last week is to see the USMCA, the trade agreement between Canada, US and Mexico. That's very positive. I think the focus is now going to shift back to the Chinese yuan and the US dollar, because Canada, Mexico, the US, I think they're happy now. Great trade agreement for all those countries. So the focus is really back to the Chinese yuan and where it's going to go from here.
Yeah, it's really interesting. I mean, obviously everyone's kind of coming in on the conversation about what happens now with China and how it uses its currency. Is there a bit of complacency because we've seen, seen it drift in a little bit of a range recently? Is there complacency that that's where it's could stay? or do you think we will see a much bigger movement? Do you think the likelihood is it will use its currency?
I think at the moment we've got a Chinese bank holiday right now for the rest of this week, so we must remember that the flow of Chinese yuan might have slowed down slightly. So when we get back in, I don't know if we're going to get more headlines out of China, but they've played it down slightly sometimes. So they say that, you know, that this is not a big deal in the grand scheme of things sometimes, and I find these headlines pretty amazing, because obviously the rest of the world is looking at the situation, wondering what's happening. I mean, just looking at things like the metals market, so like how much it's affected copper, you know, and things like that. It is struggling quite a lot. So I'm not sure what we're going to see once they're back to the market again.
I mean, a lot of the questions, we've already had quite a few questions in, so thank you very much. A lot of them on that trade war. One of them being, is dollar yuan a good benchmark for the state of the US-China trade war? If not, what is? So let's go to the first part of that question. Is it a good benchmark? I mean, obviously at the moment, as you said, we've got a Chinese holiday, but do you feel it's a good benchmark at the moment?
Oh, I think it's definitely a very good benchmark. The Chinese economy is really suffering from this trade war because it exports so much. You know, compared to the US dollar that's seeing strength, the Chinese yuan is really suffering. It exports so much, it relies on those exports. You know, the trade deficit between the US and China is 360 billion roundabout. So it's really impacting China. And that's also reflected in their stock index. You know, look at the Shanghai Composite, it's at 2-year lows. They're really taking a beating and feeling the impact of the trade wars. The US dollar's holding strength for now. It looks like they're winning, but I think the damage is going to come long term. You know, it's not an imminent, immediate impact like the Chinese yuan has been.
So what then for the dollar?
Yeah, I mean, I don't know if it's hard to say calling it winning, because if the dollar's strong, obviously anybody that exports out of the US they're going to struggle, right? So I think having those issues, and obviously the inflation pushing up like around the world in the emerging markets, that's also going to be a problem if the dollar's strong. So I think addressing some of these concerns should be key. But back in terms of the original question, like what for me is the barometer of the trade wars is actually the commodities prices. So if the demand for the commodities from China lessens or slows down, then we're definitely going to see problems in commodities prices. That's why when it comes to the trade war, I try not to look at dollar yuan so much, because, you know, being a bit of a devil's advocate here, it might be manipulated or whatnot. But things like
couldn't possibly say.
Exactly. But things like copper and you know, iron ore prices and stuff like that, I find them to be a bit more of a real barometer. And Aussie dollar as well. You're looking how much Australian economy relies on exports to China. If we've seen such a dramatic fall in the Australian dollar now, again we're breaking wave lows on a weekly basis, and maybe that's one to watch out for if you do want to keep an eye on the markets and what is the barometer of the trade wars.
I'll get to some of those currencies in just a moment. I'm making note back to the Aussie dollar in just a moment, only because, you know, I want to get through a couple of these questions because they're very much around the same kind of thing. Yeah. You know, we've got, why are the US and China pursuing tariffs against each other rather than using other tools? And this kind of comes back to that other weapons in their box. We know China, you know, has used it in the past in terms of keeping its currency low. Yeah. So can you answer that question for our viewer? Why using tariffs other than something else?
Sure. Well, I think Trump is very aggressive in his approach, and he wants results. You know, he's promised millions of people that he's going to bring down the trade deficit for the US. And China is their biggest trading partner, or one of their biggest trading partners. And he wants to see results. He wants to bring that trade deficit down. He wants to stay in office. And he needs to be aggressive, or he feels he needs to be aggressive.
Does he, though?
China. I think so. I think he wants immediate results or quick results. And if we look at Canada and Mexico this last week, we've seen a good deal made there between those three countries, and that was from an aggressive stance from the US. So I think he's hoping for a similar result with China. It's taking much longer than it has with Canada and Mexico, but I think that's the end goal, is aggressive stance, aggressive tariffs, followed by some sort of renegotiation of their trade.
Yeah, I mean, he did say, I think, oh, sorry, go on.
No, I was going to say, I agree, yeah, but then I think Mexico and China don't have, Mexico and Canada don't have the clout of China. So yeah, it's probably, it's a good thing that it happened quicker for that particular reason. But I just got a feeling that longer term, this is going to come back to bite them. I can't shake that feeling. Obviously, the stock markets or whatever are being run up, but all the central banks around the world are tapering. That tax break that their US corporates were given will eventually be priced in, and they might have to change things in the future. I'm on a very long-term view. I'm wondering what's going to happen then.
And I do agree.
Yeah.
I do agree with that. I think the US dollar is holding strength at the moment, but I think long term we're going to see those prices move into higher prices, move into US businesses.
Yeah.
They're either going to have tighter margins or higher prices for US consumers.
Who wants to see Americans make iPhones? They're going to be priced at $2,000, right?
Exactly.
Inflation's going to go crazy if all of those jobs are repatriated to America. I don't know. It would be interesting to see.
Exactly. I think the impact for the US is long term.
Yeah.
The short term, immediate impact is obviously China, and that's reflected in the market. Your dollar strength, weakness with the Chinese yuan. In a year's time, we'll see how that's.
So how do you approach that then when you're trading Forex?
Well, I think it's always good to keep an eye on key technical levels. If we see the US dollar, Chinese yuan reach big psychological levels, big highs, even though we go back to 2017, you're talking around 6.95, big psychological level at 7. We may see reversal points around there, yuan strength. I think that's the way to play it, is focus on these key levels. Also, from a technical aspect, look for those patterns. If there's a head and shoulder pattern appearing on the US dollar yuan, perhaps it's time for a bit of a reversal here, a bit of US dollar weakness and a bit of strength return.
Obviously you are a technical, that's kind of how you trade, but when there is so much else going on in terms of fundamentals, how do the technicals really come into play then? Because there are all these external elements playing on these markets.
Well, I think you have to keep an eye on the fundamentals. You need to be watching the news. But how long can this trade war go on?
That's one of the questions. It actually says, when will it end?
Exactly. Well, to answer that question, I think it will end once the US consumers are feeling the pinch. When their purses, their wallets are tighter, then I think it might be coming to an end. But I think you need to keep an eye on the news, keep an eye on the fundamentals. I can't see this going on forever. And once we seem to be making progress, or the US and China's making progress, then's the time to be looking for those reversals, those reversal patterns, those technical levels, and to get a long-term investment on perhaps US dollar weakness and a bit of strength returning to the Chinese yuan.
Yeah. In terms of the technical levels and matching it with the fundamentals, I try and price in an element of randomness with Donald Trump. Like you don't know what the guy's going to do next, really, and we've seen that since he was elected. This potentially for me can run for years. I genuinely think that it's not a short-term issue. I think it's very complex in terms of the other countries and also the emerging markets and the rest of the world are concerned. So I do agree. I think when the US consumers do feel the pinch, that's when they're going to be starting to ask questions of Donald Trump. But will he be in office? So that's another thing. He could be even impeached by then if we don't know.
There's so much to go on there that we shouldn't delve into that side of things. One of the questions is, with all this happening with China and the US, who are the winners and losers here, and how do you play that? It goes back to how do you play this? How do you trade this market?
Well, I don't think there's going to be a winner. At the moment it looks like the US is winning, but as already mentioned, long term there is no winner from a trade war. Everyone's going to feel damaged in some way. The loser,
in terms of trading it, though. Do you know what I mean? And how to trade it outside of the yuan and the dollar? Is there a winner and loser in that sense?
Oh, there definitely is at the moment. The yuan is losing.
Yeah.
If you look at the US dollar, Chinese yuan, lots of weakness. I think we've had a down week for the yuan against the dollar every week, or most weeks, since these trade wars started. So China is losing at the moment. But like I said earlier, I think watching those technical levels, keep an eye on the news, on the fundamentals. You'll see opportunities to get into a trade.
Yeah, another one is to keep an eye on is gold. You know, we've dropped below 1200 and we keep oscillating around that level at the moment. But just, you know, as soon as any headlines come in and we see any more clarity, I think that's a good one to look out for. If we see any kind of resolution, you know, I would be looking at putting a long position in gold, because it's undervalued right now in what's going on in terms of the current market. How much more downside can be priced in there? And like we've said in regards to the technicals and what to do in that department, is I think once we've seen some more consolidation and we see like a bit of a struggle between the buyers and sellers, the supply and demand levels there, I would be looking out for a consolidation breakout above 12.15 or something like that for some more movement to the upside.
Yeah, I mean, this is the thing, you know, we focus on the dollar and the yuan because that's things in play, but actually it's important to be looking outside of those, perhaps because you don't get volatility as well to where you can be playing. One of the questions is, if trade wars lead to general risk aversion for the financial system, is the US dollar still a good safe haven?
Yeah, I think so. Yeah, with Treasury yields where they are at the moment, I think any excess reserves that the countries are going to have in dollars are going to be parked in Treasuries in that time. It's a safe haven. Yields are rising, so this is the first time in a very, very long time that we're seeing investors get yields in long-term Treasuries, and even across the curve we've seen a good rise there. So somebody's obviously been selling Treasuries because we've seen a move up in yields, but that doesn't mean that they're not going to look attractive to people who want to park their dollar reserves, and that's where I'd keep an eye on for that answer. I mean, all the other currencies are implicated in this. You know, in the UK probably would have been a good safe haven if it wasn't for Brexit. Euro is a nice one, but then with Japan and the Swiss franc, they're the traditional safe haven currencies. The Japanese, because of what's going on with their QE and things like that, we might have to rule that out a little bit. So yeah, the dollar looks the best one at the moment.
Yeah. I agree with that. You know, if you look at Trump's list of potential trade wars, you know, he started with Canada, he's had a go with Mexico, he's currently have a trade war with China. What's next on the list, if there are other countries on the list? It's likely to be Europe, it's likely to be Japan.
Yep.
So I think US dollar, you know, I would not be running to use the yen at the moment as a safe currency. I would stick with the dollar, and I think most investors will.
You mentioned policies and central banks, so let's just take a look at them and how this is playing into it, because we've had strong data today from the US, but also hawkish comments from the Fed Governor Jerome Powell. That gave the greenback a bit of a boost. Now, he says we're a long way from neutral on interest rates, and the really extremely accommodative low interest rates that we needed when the economy was quite weak. We don't need those anymore. That's according to Jerome Powell. He says those level of rates, they're not appropriate anymore. Of course, the Fed, we saw raise rates last week and says it plans 4 more increases by the end of 2019, another in 2020, and that really steering the US dollar towards a decoupling with a spectrum of interest rate differentials. We spoke to a guest about just that.
Well, there is a bit of divergence in policy, and it is a change of tack. The first signal was clearly the US economy is in a stronger position than both Europe and the UK. We have some unprecedented statements from Mario Draghi and the ECB. Really doesn't want to be raising rates at this point. There are some idiosyncratic issues within that. What do we think about that? Well, it does tell us that, you know, dollar is strengthening and it's on an upward trajectory, and that has issues across the globe in terms of areas that you invest in. The global emerging markets are a weak spot in that particular trade. But in the UK, you know, we're dominated by concerns around Brexit and our own issues and the impact on our currency within that. So that's skewing the kind of US and sterling currency trade. For Europe, it's really just about, that is probably one of the more attractive markets for us in terms of opportunity. And we do see a central bank that remains supportive. That is generally good for equity markets.
So in terms of the differentials, in terms of what we're seeing in the global policy, US focus at the moment because we've had the rate rises and we're seeing more rate rises, but Europe, ECB also moving at the moment, UK too. How does that impact on your trading of the Forex markets?
Yeah, I mean, I like this narrative at the moment. I think it's very interesting. So at the moment, in regards to the Fed, like where they're pricing in a December rate hike now, and I don't think it's a given. Personally, I think as the dollar gets stronger, are we going to see weaker data, like for example, manufacturing and export data from the States? We've got to remember that there are real people trading the currency markets, real institutions. So if the dollar gets too strong, how will that affect manufacturing and exports in the States? So if data does start to wind down, maybe not December, but past December, will this narrative change? They've said that they're data dependent, which is very prudent of them because they can have an excuse to change their mind. But I don't think it's a foregone conclusion, definitely.
Yeah, I agree. The rate hikes that have been announced, they're priced into the market already. That's what the market's expecting. If we start seeing negative data come in, like Raj just said, I think then we might see opportunities to get on dollar weakness, short-term weakness. But I think that's how I will play it, and that's how I'll look at it.
But in terms of the whole global policy, not just the US, but what we're seeing in terms of the Federal Reserve, we've got European bond yield differentials also continue to widen because of what we're seeing in Italy at the moment. So how do you trade that?
Yeah, do you want to?
No, go ahead.
Okay, so yeah, euro-dollar is a great example of this. I know it's a typical English mentality, isn't it? Yeah, euro-dollar is a great example of this, as we've just seen. Like the political situation in Italy sometimes is a bit funny because like them actually passing through this budget, I thought was very interesting, and then not only that in terms of the yield curve. Spreads today, we've seen German, US, the differential widening again. So euro dollar, it has been very, very weak, and if this does continue, I think any selling off these retracements higher is probably prudent. But again, keep an eye on the technical levels. When your levels do break and you're starting to see a ceiling in euro dollar, keep an eye on any movement to the downside to continue there.
Yeah. I think as a Forex trader, full-time Forex trader, there is news coming out every day. I think if you're going to focus on short-term trades, there is this bigger picture, but what's happening today, what's happening this week. Look at the Canadian dollar strength we've seen the last week because of this trade agreement that's been reached. They're the sort of things I'd be looking for trade, these short-term news events that really drive the market. That's what I'll be focusing on rather than the bigger picture. People who are interested in trading, it's better to look at what's happening now, what's happening today, what's likely to happen tomorrow, rather than the long-term view, which is more for investors than...
Especially with Trump, as you say, because you never know what he's going to come out with next overnight on Twitter.
Definitely, but you make a brilliant point. So today we saw the Ivey PMI data from Canada, and it was extremely weak. So it's exactly the right example of showing this. So the Canadian dollar strengthened too quickly because of the NAFTA agreement, and then we see the Purchasing Managers Index struggle. So again, I fully agree with that. And these are short-term trades, short-term to medium-term trades. I mean, you can obviously trade FX quite long-term, but maybe look away from some of the more volatile issues, maybe choose a different currency pair or some of the crosses.
Talking about other currency pairs, you mentioned earlier, I said I'd come back to it. Let's go back to the Aussie dollar and what you see for that at the moment.
Yeah, so the central bank differential that we were talking about a while back is the Australian bank aren't moving. So there's no chance, we're looking at pricing in rate hikes next year, right? So obviously we're much further forward in the States than we are in Australia. So, and then obviously the China thing has impacted that as well. So yeah, the weakness in Aussie dollar is continued. But don't forget value. If something is too far away from its median value, there's always a chance that it can retrace, and there's a chance for flushing traders out who are on the short side to try and get a move back into long. I know it's a bit of a catch-22 doing that, but it's true. If something moves too far too quickly, I mean, if I was in the industrials industry and I was buying my iron ore and my copper, I would look at Australia right now because the Aussie dollar is so cheap. That's what I would do. I used to work in physical effects, that's why I think like that. But yeah, I would look at Australian dollar and think, yeah, I'm going to buy some of my iron ore stocks from there and get them shipped over.
What are your thoughts in terms of sort of the Aussie dollar and in the commodities currencies?
It's not my area of expertise. I'm a lot more focused on the Chinese yuan at the moment, but longer term, I'm interested to see what's going to happen with the yen. I'm interested to see what's happening with the euro.
Let's pick up the yen. I mean, in terms of that, we can go back to differential in terms of the global policies. So when you say you're interested in the moment, are you at the moment, or is it something you're watching at the moment?
It's something I'm watching. I'm interested to see what Trump's going to do next. He really wants to get that trade deficit down. The US has the largest trade deficit in the world, and one of his promises is he's going to reduce that. And
so is it a dollar story, not a yen story for you then?
Well, it will come on to the yen, because I think what's Trump's next move? He's, like I said earlier, he's had Canada, he's had Mexico, he's working on China. It's going to be Japan or the EU next. So for me, once perhaps this story dies down a bit with China and the US, it's looking to Europe, it's looking to Japan. What's Trump going to do with them? If he's going to be as aggressive with them as he has been with those other three countries, there's going to be some great opportunities there. US dollar, yen, euro, US dollar especially.
I have some comments on the yen though. I think today we had a comment that was saying that they might look at the speed of tapering. So that was a really interesting one for me, because how has the accommodative stance bolstered the equity markets for so long, and what has it done to the yen? So if we do see any more signals of tapering and pulling back these ETF purchases, I think we could be in for an interesting route for dollar yen. It's at an amazing level. The dollar's obviously very strong, and it's correlated with stocks, right? So the more stocks keep going up, the more dollar yen keeps going up. But obviously the ETF purchases and the accommodative stance are going to have to change at some stage. So I'm waiting out for that narrative to change from the Bank of Japan. I'm just every day or whenever I see a Bank of Japan monetary policy statement, I'm reading into it to find out if we get any clues of when this QE might finish, if it ever does.
I'm being told by my producer I haven't asked you to send your questions in. We've got quite a few questions here anyway, but don't forget the hashtag to send your questions, whether it's Twitter or on YouTube or Facebook, is IG Forex Chat. So do send it in. I'm going to go to a question now because it kind of takes us on. We've only got around 5 minutes left. Okay. And it is about Brexit. Where do you see Brexit impacting the pound over the next 12 months? Wow, what a question. I mean, yeah, how long's a piece of string to a certain extent at the moment, isn't it? Yeah.
I think it all depends on what's going to happen with the deal between, if there is going to be a deal, first of all, and what that deal's going to be between the UK and Europe. If there is no deal, I agree with many experts, we're going to see parity between the pound and the euro. I really think that could happen.
Wow,
that's a strong call.
That's a strong call.
I honestly think, if there's no deal, there's so much uncertainty there. I'm not saying that the UK economy is going to weaken to cause that parity, but uncertainty causes sell-offs. Look what happened with the referendum. Nothing changed. The day of the referendum, the economy was the same the day before. But it was the uncertainty. People don't like it.
So no deal equals parity as far as you're concerned?
That's how it's with the euro, not with the US. I don't think that's ever going to happen. But with the euro, I think that's a possibility, a strong possibility.
It's a great, strong call.
Yeah, it could be. But, my question is about that just in general is it affects them just as much as it affects us. I do think like the German car makers and, BMW, Mercedes, etc., we're their biggest market. I don't think they're going to be absolutely furious if anything like that happens. So,
I do agree. That's why it's in the best interest for both sides to have a deal.
Of course.
But I think it's the psychology. If you were faced with selling the pound or the euro, in a no-deal situation, you would sell the pound.
Of course.
But how do you trade it when you say there are so many unknowns at the moment? Obviously, we've got a summit in a couple of weeks anyway. Yeah. We've got a supposed date when we should formally leave in March, but everyone's saying, well, that could be extended. So when there are so many unknowns, how do you trade that?
Yeah, my favourite one on this is the day before Brexit, we were at 150, right? Yeah. Around that mark. We climbed up towards that point recently, like a few months back, and I was sitting there thinking, from a consensus point of view, why are we anywhere near 144, 146 when the situation, is exactly the same? We don't know where they're going to go. So obviously we had a sell-off then at that stage for cable, and then now we're at the stage I believe we could be in a potentially better situation than we were at 146 or 142, whereas we're getting closer and closer to a deal. we had some comments today saying that they were happy with the Irish backstop, or they're making progress on the Irish backstop.
Progress was more that, yeah.
Exactly. So if that progresses, you know, I think closer towards 138 is a good one. And if it's me longer term, I would be trading along on cable with a stop underneath 120 or 122, something like that, because I personally believe a deal will be done, and if it is done, we'll get back up to the 148s or 150s.
I think that the stop is a really interesting thing, a really important thing to mention here, because when there is so much going on, it's impacting. There's not just Brexit impacting the currencies because of the crosses and what's happening in the US elsewhere. Actually making sure you've got those stops in place is crucial at the moment. There is a question here. What impact will a supposed return to the Italian lira have on the EU? I mean, a lot of conversations about sort of breakaway currencies, but you know.
I was looking at this recently, so I think that the only time we get euro-dollar below 110 is if something like this happens. I think it has to be something catastrophic for the euro to sell off against the dollar materially to that point. So I think right now, I think we'll play the range with a floor level of the kind of most recent consolidation lows, moving up again towards I'll probably say 120 or so, and then back down every so often. But then the policy changes long term. If you do any research on the rate hiking cycles in the States, normally halfway through a rate hiking cycle we start to see the dollar weaken. So if we can work out from what Powell says about how close they want to get to median rates, and then how much further we think they're going to go past, that might be a good barometer for this. But yeah, the Italian lira, if that kicks back in, I'd be looking below 110 for a good trade. Yeah, definitely.
I think there'll definitely be a strong euro sell-off. Now, whenever Europe's under attack, the EU, what I mean by Europe, I think the euro just sells off. You know, it's worried. If you bring back the Italian lira, the concern is perhaps the franc's going to come back, perhaps the Deutschmark's going to come back. Yeah. And there's that uncertainty, there's the fear that the euro is over. So if the Italian lira did come back, parity, probably not, between the euro and US dollar, but, you know, at least 110, maybe lower.
Okay. Well, thank you very much. Carrying on the Brexit conversation, though, because there are 14 days to go before the Crunch EU summit. That's on 18th of October, the original deadline for the Brexit deal. It's also the day that we're going to be back with our next IG Forex chat. So do make sure you join us as we talk Brexit, and indeed what it means for not just the pound, but the euro and a basket of other currencies. Again, you'll be able to send your questions to our experts on that. Also, might as well, while I'm here, let's also promote tomorrow's show, non-farm payrolls. That's tomorrow for September. As usual, we're going to be live when the data's released. Do join us. That's at 1:25 for our special coverage. That's with Jeremy Naylor and Commerzbank economist Peter Dixon. Also, the IG analyst Chris Beach will be joining us to talk you through the numbers and indeed the trades to watch. But for now, that is it. Thanks to both of our guests. We've got Sam Morton and Raj Dhall. Thanks for coming in and for answering all the questions. And thanks also to you for sending in your questions. Have a very good evening.